my title is The Mother of All Resource Junior Bull Markets, and I'm going to explain today why I think this will last to the end, at least to the end of this decade. This will be something like we've never seen before, coming on the heels of a horrible 12-year bear market. I was here last year, and I told everybody I'd almost packed it in at the end of 2024, but I decided to stick it out. I had 100 subscribers, paying $450 a year. At the end of this year, I had 200 subscribers, even though this has been an extraordinary year, at least second half of the year. So again, this is just getting started. The audience is only half full. We are so early still. Now, there is a $900 special, January FX special. I'm closing the $450 for Kaiser Research Online. In February, it becomes $2,000 a year and $200 a month. If I can't sell it at $450, why would I be able to sell it at $2,000? Wait till 2027. But the new thing that I did to demonstrate that I'm not insane, doing the same thing over and over again, I rebranded myself as Kaiser Research Substack, which is only $10 a month or $100 a year, and that is cheap, super value. Is it for most of you? No, it's actually intended for two generations that are missing as audiences for the junior resource sector. It's the Gen Z and millennials. Kaiser Research Substack is my education platform to bring these lost generations into the junior resource sector so as to sustain this Canadian resource ecosystem for another couple of generations. So the Substack's about the favorites collection. These are companies that don't have missing pieces, that they're usually graduates from the Bottomfish collection, and sometimes I find a company that is no longer a Bottomfish I like and say, this audience needs to see this. And there's 29 of them, and the whole group is up 357%. Don't let that scare you. Much of that is due to Robert Friedland's Sunrise Energy, which is up 4,000%. And these guys, P2 Gold, which was the cheapest company last year, which is up 1,400%. The Bottomfish collection has 115. I've got 20 on the further research list. This Bottomfish window is already closing. So what the KRO Club is going to be doing is monitoring these and watching for these missing pieces to fall into place and start buying them when these boats moored at the dock in the safe harbor start to put out to seas, which have been treacherous for a decade. But now the seas are promising riches, and this will be the strategy as this market gets going. There will be more and more companies joining the flight out to sea. Now, this chart I introduced in early 2024, and this was in the wake of China or Russia invading Ukraine and China saying, we're Russia's friends. We're not your friends anymore in the global West. We throw a lot in with Putin. And so I envisioned a conflict between global West and global East, with the global South, which is largely the emerging markets, being what they both sides vie for in terms of their raw material supply. And this is a chart I've also used for several years, which shows the blue is what global West nations, democracies produce, the red is what the global East autocracies produce, and the green is the global South. And so this was going to be an interesting competition to secure metals both within global West, which wasn't going to happen because of the arrogance of the global West people that, we get stuff from elsewhere, not from our pristine backyard. We don't care about the people in these other nations. So it was mainly about the global South. Last year when I stood here, I had listened to what Trump was saying during the election campaign. He was not lying or saying anything strange. What he's doing is what he promised to do, and I realized the global West alliance is going to fracture. It's going to be America alone, America for itself, America against everybody else. And that changes the dynamics completely about where raw materials come from. So There was a brilliant speech by Mark Carney at Davos this past week where he introduced the notion of the rupture. Now, the United States is by far the biggest economy in the world. And together, the global West, with the United States included, the top 20 companies are 81% of GDP, and 53% of that was the global West. Now we have the global West with 26% and the United States with 27%. But now people know America is no longer anybody's friend. So the adaptation is underway. And this creates a bit of a problem for the United States because its GDP, only 20% of it actually involves making physical stuff. The other 80% is services. So if the goal is to become an autarky where you are self-sufficient for everything, this is a massive shift that has to happen, and that's what tariffs are supposed to do, is shift the manufacturing to the United States. It hasn't really started yet, but that is the plan. This is the problem with this plan. The blue is the percentage of each of these 50 metals that the United States domestically supplies. The red is what China and Russia together supply. The global East alliance is pretty much against the global West and the United States. So how is the United States supposed to overcome this supply deficiency that has grown over the past decades thanks to this NIMBY culture? So Canada's version is also pathetic. I mean, look at this. Here's the second largest nation in the world with only 40 million people population out of 8 billion or so on the planet. And what does the Prime Minister do? He signs Canada onto UNDRIP and basically establishes 3% of the Canadian population as having final say over the destiny of Canada's resource riches. And Carney has inherited this. And Trump is looking north of the border and seeing all this potential that has basically been put in limbo, suspended, available for the taking. So Canada is now in an interesting situation where it either has to start mobilizing its resource production, start getting exploration going for new deposits, and also with the rising prices that are coming from these supply shortfalls due to geopolitical fragmentation, to just look at older systems and rethink them. This is part of why I think we are heading into the mother of all resource juniors. And it's going to happen. Either Canada does this voluntarily and the First Nations maybe give them a 1% NSR on all future mines, and then they can fight amongst themselves as to how to divvy it up with their overlapping jurisdiction claims. In 2009, October, in Washington, D.C., I introduced this graphic to sort of predict how the fragmentation of the globalization would take place. And it's kind of borrowed from Orwell's 1984. And this month, following last month's national security strategy, where they basically updated the Monroe Doctrine and call it now the Don Roe Doctrine, the United States is claiming dominion over the Western Hemisphere, including Greenland. And of course, that means Canada is really the easiest targets. What are they going to do with South America? Annex it and then have a Latino reverse takeover of America as the Latino population dwarfs the whites in the United States? That's not going to happen. They're not going to be able to really project power into South America, but Canada is going to be the target. And note that China is going to take most of Siberia for itself because Russia pretty much depends on China. So here's just 4 metals in which Canada can excel. And uranium and lithium carbonate, they're part of the clean energy future. And of course, copper, we have the AI boom projecting future demand growth. And of course, with fragmentation of supply, if the world does split up into these economic trading zones where stuff from Australasia never gets to North-South America, it's going to have to be found and developed domestically. And you're already seeing like lithium carbonate prices have gone up. PMET Resources, which is part of the favorites collection, it's now actually up from what it was at the beginning of last year. So this is starting to happen. Now, critical metals are one of the drivers of the mother of all resource junior bull markets. The other one is gold. Now, this graphic I've shown for more than a decade too, and what it simply does is it inflation adjusts gold from the first reset after shooting to 850 and dropping to 400 in 1980. And this is what inflation should have done to gold. Instead, you see this is what gold did during this period until the financial crisis gave us this, and then it crashed back to the inflation adjustment trend line, and then it really started to take off here. This is largely unexplained. Today, it almost broke $5,000. Now, why has gold, since February 2024, when it was just below $2,000, has not had any serious pullbacks? Yes, it's had pauses where it goes sideways for a while, and then it keeps going up. Well, conventional explanation is the ETFs have been buying this. That's bullshit. Look at this. Here's where gold takes off, and it's still actually going down until gold's already moved close to $3,000. The ETF holdings have not increased in proportion to the gold price. Now, you look at the GLD ETF, and you can see how the holdings pretty much track the gold price trend until 2024, when it actually decreases, and it's still lower today than it was at the end of 2012 before gold finally crashed back to $1,100. Again, this is unexplained. So a second explanation is, the central banks have been buying gold. Yes, they have been buying gold, but the central banks have to truthfully report their official gold holdings. It's at the lowest level since the start of World War I. The gold production has continued relentlessly, about 110 million ounces last year, or the year before. And so the holdings have largely been flat. Yes, they are increasing, but they do not explain why gold has been in this relentless uptrend. Here's what the distribution looks like. I've shown this like many conferences. It's pretty much the same. China for like 5 years has been stuck at 4 million. United States has been unchanged here. And this has been pretty much the same. So a real question is, if China's the domestic official buyer of all domestic gold production, where did it end up? And here you can see in 2007, China's gold production finally eclipses South Africa's, and it has been the biggest producer since then. And I've taken all the production figures that the USGS publishes, and I've also tracked the holdings of the central bank. And here's the gap between what the central bank officially holds and what China produced. There's 216 million ounces. Who did they sell it to? Did they sell it to the Chinese people as a hedge against the great RMB? Because we really want you to be uncertain about our currency? I don't think so. Whatever gold the Chinese have bought has been bought through imported gold. China has state-owned enterprises. They don't need to report anything to anybody. My conspiracy theory is that China, throughout this period, has been hoarding all this physical gold inside its network of state-owned entities. And why would everybody, this is probably what's been going on in the last 2 years with many other nations, and say, well, why are they being so secretive about it? Well, it's no secret that Trump has said he will punish any nation which makes any effort to wean itself of dependency on the US dollar and owning US Treasury bills. So, yeah, self-preservation. So, what if they revealed that they had 290 million ounces compared to America's 261 million ounces? And what if they have been the main buyer in the past 2 years, which is why the gold price has never really come down after each gain? What if it's at 500 million ounces? Now, when would be a good time to reveal that this is what we have? Well, with America withdrawing from the global stage and alienating friends and allies, it's kind of like a failing nation. And when they get around to annexing Taiwan, it's going to be a big fuss. America's probably not going to do anything about it. And then the world, which is already trying to figure out how to adapt away from dependency on the US dollar, it's going to suddenly see China slap down maybe 500 million ounce reserve to back its currency as a serious competition for the US dollar. Now, this cannot play out overnight. It will take more than a decade. But it will be the signal that, yeah, you want to get rid of, the United States prints dollars to buy the treasury bills that are maturing. What do you do with that money? You buy gold. Gold is this temporary bridge away from America. Now, I used to show this chart starting about 15 years ago, and it's basically stacking the value of the above ground gold stock on top of what the total global GDP is in nominal US dollars. And this is what the sort of gold price trend has been. This chart doesn't really mean much at all. But one of the things I came up with, I decided, what if we take the value of the gold stock and divide it by the GDP in that year? And I saw this crazy thing happen in 1980. What was special about 1980? Well, that was when America seemed to be losing it. They had to bail from Vietnam. OPEC had taken the boots to them with the price squeeze. Inflation was roaring. It looked like the hegemon was going to fail. Now, of course, Volcker did his shock treatment, and this did not happen. And America ended up prevailing as the biggest economy and most powerful military in the world, in the history of the world. Now, back then, this was 24%, and here's like the post-Cold War globalization peace dividend, where gold was way down there at $260 or something like that. And then we had that peak here during the financial crisis, then again here. But now, it's in uncharted territory as a percentage. That $30 trillion is about 28% of $120 trillion of GDP. This is a stress indicator. There is enormous stress in the system, and it's not going to go away. So what is the stress all about? Well, 250 years ago, America began the greatest experiment in democracy ever through its Constitution and Bill of Rights with an amending mechanism that has, slowly purged a lot of the flaws that are in it, but it's under assault right now. This is where everything wants to be headed. And the battle now is to preserve democracy and all these sorts of things and fight back against this. And this battle right now is being lost, which is why younger people kind of think we're heading into an end times, because the people who control all this, they don't care. So this chart is a sort of a brief history of the bull cycles we've had. There was that brief 850 bull cycle, then the recession bear. This is important. For 20 years, gold just went sideways. This was an enormous bull. First in the 80s, new discoveries in Canada. And then when the third world frontiers opened up, it was of the discoveries in South America, in Africa, and all that. And then, of course, Bre-X happened, and we had the whole dot-com mania slump. And then came feasibility demonstration cycle, the China super cycle. All of a sudden, it was about digging up these old deposits that were marginal and rethinking the economics in terms of the higher real prices that China's emergence from out of nowhere had created. And then the gold bubble was part of that. But that all crashed and burned after 2012, which is when our bear market started, and cannabis and crypto bubbles. We had the brief COVID boomlet, but that stalled also. And then until about 6 months ago, we had this in gold we no longer trust, where the producers weren't responding to this uptrend in gold. The ETFs weren't being bought by retail investors. So it was like gold was dead. Crypto was what it's all about. So my argument is we are facing a period like this. Gold will, I don't know how high it'll go, but it'll crash back somewhere between $3,000 and $6,000. And that will be the fundamental reset. And at where it is now, 4,800 or so, that's a 200% real price gain above the inflation-adjusted $400 from 1980. This suddenly opens up a world of exploration. What counts as a discovery grade changes, going into these old systems and lowering the cutoff grades to factor in the net smelter return of the gold component at the price, rethinking these deposits. This is what the game is going to be about for the rest of the decade. This is not going to be a flash in the pan that ends in the next 6 to 8 months. This is enduring. And in December, we had record financing for TSX venture resource listing companies. And it's pretty much concentrated in a small percentage of all the listings. Much bigger than this gold rally, and of course much bigger than the China super cycle. This is just getting started. We're going to see over the next couple of years the base of companies being able to raise money. If they can demonstrate they have a good story, you will see that base widen. And that's going to start spreading the wealth from a handful of companies to a lot more, and it's also going to keep pulling in audiences. The system's still damaged. This is based on September 30th financials. These are the ones that have more than $500,000. There's still 42% have negative working capital. And so the system, it's just waking up. It only has $4.4 billion in the companies with positive working capital. And the zombies owe about $2.5 billion, which is all going to get converted to paper now that the creditors realize, oh, if these guys start fresh, stock will probably go up and I might get my money back. And this is critical. In the past 6 months, we have seen the percentage of stocks trading below a dime plunge down to 27%. Now, the lowest was back in the China super cycle when it was 4%. And again, after the rebound from the financial crisis, the worst was, of course, 2015, when we were realized, oh, this is really bad. And now, this is why also, bottom fish looking for stocks below a dime, soon below 20 cents, quality ones, not garbage, that's coming to an end in the next 12 months. But what could tank this story? Well, simple thing is suddenly, the president resigns, Congress gets a spine and says, we're going back to the way we were. We're going to be a democracy. We're going to have rule of order. We're going to collaborate with all our friends. What are the chances of that happening? They can try, but the world already realizes it cannot trust the United States. Maybe J.D. Vance becomes the next Donald Trump. So we are in a period of uncertainty that cannot go away. That will sustain the need to develop domestic critical metal supply and the desire to own gold, which will keep the price high and create the basis for exploration. So the 5 companies here have, all except one, have done really well in the past year. But this party is just getting started. Vista Gold, I run the numbers at $3,000 and at $5,000. And here at $3,000 is the fair speculative value. This stock should be at $14 to $21 if you take the 50,000 ton per day scenario seriously. It was almost $3 today when it was 60 cents a year ago. This still has lots of running room. And what if the price of gold ends up being somewhere in here? At some point, the institutional shareholders of the gold producers will stop saying, use your cash flow windfall to pay dividends and buy back your shares. This won't last. Don't be stupid like last time and acquire these companies. You are a sunset industry. At some point, there will be an inflection where they say, you better get on with building your future gold production base. And that's when the M&A stops being just sideways M&A, where you're simply mashing existing production together. That's when the capital rolls downstream and starts to absorb the Vista Golds. And part of my campaign to get millennials and Gen Z, because Vista trades on the NYSE AM, Robin Hooders can buy it. So when the younger people start seeing this and understand the logic of how this all works, this stock will go nuts. And I was talking to a friend from I've had for 40 years discussing this sector. And he says, John, you're going to look stupid because something like Vista, if it doesn't get bought out, will end up at an insane price of $200 somewhere along the road. We have not had that kind of craziness for 15 years or so, this could come. I don't want that because that's no good. I'll have sold all mine way before that. But be aware that could happen. P2 gold. Everything in sort of middle of the year changed. They had negative working capital last year, and now they have 10 million positive working capital. They have a feasibility study done by the end of the year. They updated their PEA, and if you plug in $3,000 gold, you get a future target range of this. And the fair value of that is this. So even though it's at 90 cents, up from 6 cents, this still has room to double or more. And this is before copper actually taking off, because I'm just running copper at $5 in this particular case. Endurance Gold has been a perennial favorite of mine. And this week, they stunned everybody with a new resource estimate that was far better than anybody had anticipated, and the market is waking up. Now, there's something called the S-curve. Fair value for like a world-class $2 billion outcome is 50 cents to $1. But the S-curve is when they start drilling and showing there's more than 1.5 million ounces, that's maybe 4 to 6 million. We haven't had S-curve dynamics. This is what Pierre Lassonde called the Pierre Lassonde curve. We haven't had that in a long time. This is also coming back. And Solitario is the one that has been tracking sideways. And it is a potential $200 stock because it may own the mirror image of what the whole Northern Black Hills was all about, a 19 million ounce endowment. What is the problem? The U.S. Forest Service just can't get around to issue the permits. Now they're very close and they've got other things going on this year. This is also listed NYSE AM. This is the opposite discovery exploration end of the spectrum for the Robin Hooders to learn how S-curve works. So again, this is the one right now that hasn't moved, but potentially has 3 discoveries, major discoveries on the table by the end of this year if the permitting bodies allow. And again, America, last year really wasn't that much progress in the permitting speed. It's a slow process, but as the urgency of this predicament really sinks in, the panic will spread, and the shift will go from protecting pristine America and just relying on stuff from elsewhere. We got to find it at home. We got to develop it at home. We'll do it properly. It's not going to be a shit show like it is in Congo or somewhere like that. It's going to be done properly. And the final one, these other ones are all kind of political stocks because we're talking about gold, we're talking about critical metals and all that. This is what I call an exotic junior, Nevada organic phosphate. They have just confirmed that they may have a scalable supply of organic phosphate. And the desire for organic food, it's apolitical. It crosses the entire spectrum because it's the boomers who are realizing they're living longer than they were expected to live, and they're starting to say, gee, I better make that continue. So they're looking at organic food. So this stock, as they start demonstrating this, could end up becoming a cult stock that crosses the left and right wing part of the spectrum, encompasses the MAHA, Make America Healthy Again movement. This is a potential superstar. Again, they have permitting stuff to go through, but they're now on track to demonstrating the first part. So that concludes my presentation, and I hope I've convinced you that we are just in the beginnings of what's going to be the biggest resource junior bull market ever. Thank you.